Hi guys, good afternoon and welcome to Money Control. I am Karunya and with me is Manisha Gupta to give you an update on what's happening in the commodities universe. And all eyes today on oil prices up 10% this week. Is it just the OPEC decision that has fueled the rally so much?
It clearly looks like that. Hi, welcome back, Karunya. Yes, it really was flame the conversation or buy the rumor and sell the fact. So you've seen 10% of the gains come back on what the OPEC really could be doing. And OPEC clearly has delivered on the higher side, dramatic as it is always. So 2 million barrels per day is what they have talked about as a cut in output. But remember, in reality, it could actually be around 1 or 1.1 million barrels per day because the OPEC output has been less than their agreed quota anyways. So when they talk about 2 million barrels per day of a cut, they also are perhaps accounting in on what they are not producing anyways, and then some more cut on the top of that. But it would be an interesting November to watch out for on what exactly the cut is on ground here. As of now, we are working with some deficit in the international markets to the tune of 0.5 to 0.6 million barrels per day. OPEC has been consistently producing less than what they have promised. But all said and done, this is the first time they've come out with such a huge number since early 2020. That is when they had cut production by 10 million barrels per day, which was the biggest ever in history, and which actually calculates to 10% of global supply.
But back when in 2020 all of this was happening, things were very different then. Right now, is the demand situation also as weak? How do the two situations stack up against one another?
So, well, that's the real thing, really. The reason that you have seen the crude oil prices come off from 120 of a high to almost $80 on the lower side was because the demand was not picking up. Markets were completely ignoring the supply side of situation here. But with supply now being curbed, especially from OPEC, that thing is what is being addressed right now. When it comes to demand, well, it's slowly picking up. China's coming back from its COVID restrictions. We've seen some economic data in China improve. Stimulus measures from China could be coming in soon. Well, yes, economic data in UK and European Union are still much on the weaker side, and is the reason that you are looking at the crude prices there weak. But the markets do believe that as we move forward from here, this is not going to be the only thing. You still have the European Union price cap coming in on 5th of December. If that comes, Russia is expected to retaliate yet again. Excuse me. For the very near term, you have the US non-farm payroll data tomorrow itself. So there is a lot of stuff lined out. It's not going to be one boring day in this quarter, to say the least.
Okay, and typically, when oil prices surge so much, we see some amount of jitteriness or nervousness in the markets, but that hasn't happened this time around. So, was this reversal something that the markets were pricing in? It was supposed to happen sooner or later, given the correction and the retreating that we saw in oil prices.
Oh, you have it absolutely correct. Yes, the kind of sell-off that we saw, markets were anticipating some technical correction and a rebound into the markets, and you have it here. And the reason has been quite strong as well, coming in from the biggest cartel in the world when it comes to crude oil. Having said that, are we headed to 95, 98, 100 kind of levels in that rally, in this current rally? Does not seem like that because we already have factored this in now. What the markets are now worrying about is the non-farm payroll data by the couple of interest rate meetings that still are lined up before we end this year, which are expected to be on the aggressive side. So markets will be wary and watch out for that too. I think from that 80 to 90 is the kind of range that you will be working right now. Yes, we've seen 94 and 95 perhaps as well, and that does look like a near-term peak on the charts right now.
Okay, but even before we could realize the benefits of the cool off in oil prices, they're once again rebounding. So, how does this, work on our numbers as a consumer? The amount I would pay for petrol, when the prices are now rebounding, will I see any respite at all with the lag effect or no?
Well, that seems quite difficult now. Yes, we're not heading towards $100 a barrel yet again, but are we going much lower than these current levels? That also does not look like a possibility. There are underinvestments. Power is still expensive. There are electricity shortages that we are seeing in most parts of Asia and definitely in many parts of Europe as well. So those concerns will continue to be in the market. The gas availability and the whole point that the street will continue to watch is the Russia-Ukraine conflict on
Hmm.
what kind of a back and forth are we headed into that. I don't think ahead of that you're looking at a lot of big adjustment coming in for your own petrol diesel prices.
Okay, unless there is something decisive that happens, we will be range bound as far as oil prices go. Thanks so much for filling us in with what's happening in the oil markets. And with that, it's a wrap on today's chat. Guys, thank you so much for tuning in. We'll be back again 1 o'clock tomorrow.